Hey guys, Opposite here, and today I'm going to give you my conclusion for this week's market review. So in this market review, I pointed out this level and a couple others above it. And the only reason I thought that we might go for these levels up here is because I was very bearish on 10-year bonds. And indeed, the 10-year bonds bias has played out, right? The level I marked out, I called out over here, and then the daily fair value gap that I said we're likely to draw to under that. And then here's the weekly fair value gap. I'm not sure if I called this one out on the video, but I was expecting it. Those levels got hit. So 10-year bonds did deliver my bias. Right now, 10-year bonds moving down typically would mean that the ES would move up. And that's why I looked for some buy-side targets prior to going down. However, we had I guess we can call this a black swan event, where 10-year bonds dips 5.5%. Here, let's just look at the weekly candle. Weekly candle, high to low, dips 5.5%. And ES weekly candle also dips 4.3% alongside that. That is something crazy. It's a black swan event that is very unlikely to happen. And that is why I wasn't expecting this move down on ES. Even though I wanted to see us go down, right? Remember, I said I would like to be bearish here just based off the ES chart. That's what I said in the video. But 10-year bonds led me to believe that the downwards bias is lower probability. And that's fine. That's fine. Shit happens. You don't always have to get everything right. I was right about this upwards move. So the first few days of the week were really nice for me because it moved up exactly as I expected. And then once we formed the SIBI, it was pretty obvious to me that we were going to continue going down above this high. Institutional order flow entry drill, boom, down to here. So yeah, ES moved. I mean, I understand what happened here. I just wasn't anticipating this portion of it, these two candles, because of my bias on 10-year bonds. Now let's get into DXY. What did I call on DXY and what actually happened? So I called out this sell-side liquidity and this sell-side liquidity. The reason I expected us to deliver to that is because we cleared this buy-side liquidity, and then we came down and started making our way towards the sell-side liquidity. So I called out this fair value gap right over here, this fair value gap that I was looking for a downside move from, potentially to clear this liquidity. Now, this 4-hour fair value gap did indeed deliver a move down, which I capitalized on euro dollar. However, and I close it at the low resistance target, which would be this rejection block. However, the reason that we didn't collect this liquidity, now I can assume in hindsight, is that this wasn't enough buy-side liquidity for us to want to go for the sell side. But now that we cleared all of these highs, all of these higher time frame draws on liquidity, and we tapped into a volume imbalance, I'm going to make a very confident prediction that the DXY is going to move from here to here, likely even today. It doesn't have to be today, but today is a red folder day. There's unemployment change, Canadian average hourly earnings month on month, unemployment rate, American and non-farm employment change, I believe, if I remember correctly. Yeah, non-farm employment change. There's a lot of high impact news today. So I think today, Friday, the 10th of March, I believe today is likely that we will see a lot of downside on the dollar. Now, it doesn't have to be today. This can also take place next week. I just think typically with these types of news, you can see a whole week's move in one day. So yeah, I'm hunting sell side on dollar, which means I ought to be looking for buy side on ES. Now, let me give a quick prediction on 10-year bonds. I'll give a quick prediction on 10-year bonds where I think it's headed, and then that's gonna better guide us. So 10-year bonds, first, let's analyze the liquidity. So the liquidity here would be buy side liquidity, and we clear the buy side liquidity. And it looks like a pretty healthy uptrend to me. Did we... Wait, how much of a move is that? Okay. It looks like a pretty healthy uptrend to me at the moment. However, let's go on the monthly chart real quick. We gotta see this liquidity over here. However, we did tap into a drawn liquidity on the higher time frame. Okay, so we hit a drawn liquidity on the higher time frame, right? So let me show you what that means. So we cleared all of this liquidity. I think what's likely to happen now, considering, right, so on a much more macro scale, this would be a bullish structure break, and between this high and this low would be a fair value gap. This would be our sell side liquidity. Let me show you how this would look like on probably, I would guess, a 9-month chart or a 12-month chart or a 8-month, 6-month. Okay, on a 6-month chart, this would be a fair value gap, right? So we broke structure like this, we hit a drawn liquidity, a fair value gap, an area of resistance after clearing liquidity. I think now it's likely we will go all the way down here. Now so that gives me a macro downwards bias on 10-year bonds. So 10-year bonds, macro downwards bias. Now we can extrapolate that to the weekly chart. On the weekly chart, if we're bearish, and this is if we're bearish on 6-month chart, on the weekly chart, we would want to look to sell any move up. So here we have a move up that clears buy side liquidity. Taps into a fair value gap as well. Okay, so what do you do when you see a move like this? What does tap into as well? A bearish order block. So what do you do when you see a move like this? You look to sell. So my sell side target, well, right now, since we just tapped into this fair value gap, I'd want to see, to take a short, I would want to see how we react to this fair value gap on the weekly. But then my target would be for sell side liquidity, these relative equal lows, with this being our draw. And then, so here is sell side liquidity, and that being the draw, because that's the first fair value gap. And then ahead of that, this would be our sell side liquidity. This would be our drawn liquidity. Okay. So I would expect this move down through here to be aggressive. And I would eyeball this gap as well. So now let's go down to the daily chart. On the daily chart, bonds, not so much info, but on the daily chart, this is what I'm eyeing, this gap over here. So yeah, on the daily chart, it looks pretty clear. I think we're gonna go down to this gap over here. So if I'm bearish DXY and I am bearish bonds, then I ought to be bullish, very bullish on ES. So ES, where could we go? So where could we go up to, and where could we go up from? So here's a buy side liquidity target. It's a resistance level. I called it out last week. I showed you guys in the video why I have this marked as buy side liquidity. So go ahead and watch out market review if you haven't. And then past that, we have this high, which is also buy side liquidity. And past that, we have this high, which is also buy side liquidity. So these would be the highs I would look at. Now, where could we go up from? So if we want to go up, then it's going to have to be from a sell-side liquidity pool. So one, we have sell-side liquidity right over here. But I don't see why we would do such a major move up without manipulating this support level. So I think we ought to see a move under that like this. So we'll see. This is pretty complicated. This is a pretty complicated bias. We could see up from here, but it's gonna have to come back for this level sometime. So once we purge this level, I'm gonna look for long-term upside. Anyways, those are my thoughts. That's the market review. Hope you enjoyed it. Watch the previous one if you haven't. It's very important. And join my Telegram. I host Twitter Spaces almost every day with ICT concepts. Go ahead and follow him. I'll drop his Twitter below. Peace.